everybody. Welcome back to the Fourth Revolution Quarantine Edition. Right now, I'm outside here in the beautiful farmlands of Illinois. Right off the bat, I just wanted to say I feel bad for those of you who spent tens of thousands on your Masters tickets. You know, they just announced not having any fans at this delayed November Masters, and I donned my Masters cap in commemoration of you all. And hopefully we will be back on track in April when the Masters is scheduled for next year. So today we'll be talking about some critical market levels that the bulls and bears are fighting at, and we're going to discuss one opportunity for the rotation into cyclicals that could provide your portfolio with a good boost in this rotation. So we are battling it out right here at this key resistance level, which was our February all-time high. And it does not seem like we're able to get up to it. Yesterday, we got right about 0.1% up towards it. And this 3,400 S&P 500 level is just a resistance that I think that we are going to have a huge struggle to get through. And I would not be surprised if we bounced off of that towards the downside. So I would be very hesitant with my purchases in the broader market. I know we've been seeing a cyclical rotation out of tech and towards some of these, like I said, some of these cyclical names like financials, utilities, energy even is seeing a boost. But you know, be hesitant. Don't be overzealous with your purchases, as this 3,400 level is crucial, is a crucial resistance level. So, I mean, we've seen some positive economic activity. You know, unemployment dropped to 10.7%. You know, this is still historically high. It's the highest we've seen since, since the Great Depression. But investors and analysts are optimistic that this recovery is going to be swift. So, looking at the NASDAQ 100, we're looking at a price target up here at, sorry, you can't see it, 11,600, which if you're trading QQQ is right about at 282. So that is the price target we're looking for. I mean, we've seen some dips. There has been some sellers in the market for this seemingly stretched valuation big tech index. And, you know, but with every dip we've seen the bulls come right back in and buy it back up. So I am still, like I said, hesitant to buy any of these big tech companies that have had stretched valuations. And it seems like whenever there's positive economic news coming out, like the first time yesterday, we had unemployment claims drop below 1 million for the first time since this pandemic began. And today we had a 1.7% push in retail sales. So retail is on the rise, but you know, it seems like every single time we get this positive news, investors are pulling profits. And I think it's because most of this upside is already priced in, and we're kind of hanging by a thread. I've been trading QQQ puts in anticipation of a broader pullback, and I think that it could be on the way. And the catalyst could be technical. It could be this 3,400 level. Once we hit it, we could shoot down off of it. But don't be selling everything in your portfolio. Just be careful with your purchases. So I said be hesitant with your purchases. If you are itching to buy something, I would be buying something in some of the underperforming sectors. And what better name in the banking sector than Goldman Sachs? Goldman Sachs is a powerhouse. Even if you don't like banks, it's hard to dislike Goldman Sachs. They just produced record-breaking revenues this past quarter as they took advantage of the volatility in the market and the increasing amounts of consolidation within businesses. So they've had a lot of M&A activity as well as IPOs coming out at these we've seen. And I think this is a great long-term opportunity. This company yields a 2.4% dividend annually, and I think we have a huge capital gain upside. Right now, we're trading about just over 17% off its all-time highs, and I think that this has a lot more room to run. So banks have been, have been beaten down because of this low interest rate environment, but Goldman Sachs is driven more by trading and M&A activity, more so than other regional banks and its consumer banking cohorts. So Goldman Sachs is an opportunity for the long term. I'm not saying that there's not going to be any short-term volatility, but as a long-term investment, Goldman Sachs is the bank to buy. So be cautious with your equity purchases. I did think that Goldman Sachs is a long-term opportunity, but I would be hesitant to purchase anything on a large scale. Like I said, 3,400 is the level to watch. It is our old February highs for the S&P 500, so watch out for that. We're stalling a little bit with the equity markets, and it could be time to look towards commodities. So our cohort, Jeremy Mullen, is the man for the job, and we have a promotion at Zacks.com/promo for a free look at his commodity portfolio. So check that out at Zacks.com/promo. Thanks for watching, guys.